Testing, testing, testing. JB here. Hope everyone's doing outstanding. April 5th, 2024. I always say I'm not going to talk too much. I actually don't have too much more to talk about than I've already ranted about this week. Talk quick about the markets. The big job report this morning. CPI data is coming out Wednesday before the market open. Earnings season kicks off on next Friday. And then talk really quick, DELL, Intuitive Surgical, which I haven't traded in quite some time. I'll talk quick about that. My hedge trades this week, broadcom, MDB, and the pot names, which starting to find some footing. So maybe those will start to go and go from there. But first I'll talk about the market. Take a look at the S&P. Yesterday when I was on audio, it was in the midst of the market melting off. We hit highs, I think 324 and change at about 12:15 in the afternoon. Markets were green. The market had recouped all the losses from the previous sessions and looked pretty good for further gains into today, depending on obviously the jobs report. And then there was Fed speak, so a couple Fed speakers, and then some who were not even voting members came out with comments that seemed pretty hawkish. So one, I guess the Minnesota, whatever the case may be, came out and said he removed the probability of, he had it down, jotted down that there are two rate cuts, possibly now of no cuts at all. And some other Fed speakers came out and pretty much reiterated somewhat of a hawkish stance, wait on data, things like that. So it just wasn't good. It seemed like it accelerated at about 2 o'clock. You also had chatter around the Middle East. There continues to be the tensions there between Israel and all the other countries. Now with Iran, you had Israel kill one of their leaders in Syria. So there's talk there, back and forth. So oil prices going higher as well. So I think all those together just sparked some selling, and it just was a snowball effect. The markets closed at lows. The SPY reversed from that 324.97 all the way down to 513.03, I think was the close, and over 2% intraday swing. And I was talking about it last week around the same time as this week, that the trading range on the S&P was extremely small last week. And typically when you see that, it's almost some consolidation before the next leg. And of course, I thought to the upside, but we saw what happened yesterday. But then you have today, and if you had told me the jobs report was going to come in higher than expected, there was going to be backward revisions to the previous months, and then the unemployment rate was going to tick down 0.1%, I would have thought we would have further selling. Instead, the market's found a bid. S&P has recouped some of the losses so far, up 1.33%. And then you take a look at a weekly loss, and it's only, we're looking at only down 0.6% despite the big sell-off yesterday. So interesting to see how we close. If we close in the 520s, I think that will bode well. I keep putting on the watch list that 518.40 handle. That continues to be strong support, or it wasn't really that strong support on yesterday, but when the jobs report came out, it actually, futures dipped right to that 518.40 handle and bounced. So I think that'll continue to be an area. If that doesn't hold, the 512.50. And then on the flip side, that 524, 525 handle on the SPY for resistance. I'm cautiously optimistic that maybe at some point next week or even the week after with earnings starting, that maybe we can test that 530 on the SPY. But I'm certainly going to continue to use hedges. So when I'm in quite a few call positions and no hedge positions, it makes it extremely tough to hold, especially when you have longer dated strikes, to hold those positions, right? Because you're watching premiums or profits erode from your calls, and then you're not making money on this drop. So I'll continue to look for opportunities to play hedges because they serve the two purposes. One is to make money on the drop, and then two, to help take the emotions out of the trade on the call side, where I'll be closing a call position way too early, which I would have done with DELL on Wednesday if I don't have a hedge position. So that's the overall markets. Let me get into DELL, and what a crazy move on DELL. And I was saying it, I think I said it in the chat room a couple times, and then on the watch list when it was 118 or so, I said, wow, I could see this overshoot to 135 or so. Sure enough, was it due yesterday up 136, and then it completely reverses into red after the market started to tumble in the afternoon, all the way down. I think it hit 127. Is that where it closed? And then this morning, another follow through down to 123.51. It almost seemed like we cleared out stops, and then boom, just started to rally. As much as I wanted to hold the rest of my April strikes, I already made some nice profits already. Some I sold at $6 yesterday, And I also want to roll out to higher dated strikes because I think if this FOMO situation with Dell is not over, I think it's still getting repriced for what's happened with Supermicro and obviously NVIDIA. And I think people are looking for other avenues to make money in the boom and the craze that's going on. And I think a lot of people have overlooked Dell and continue to overlook Dell, and and I think it's going to get more eyes on it. I mentioned it yesterday in the watch list. You had, I think it was Barron's coming out yesterday saying Dell's rallying on AI demand, but meanwhile that AI demand and their back orders and things like that was already out on the table when they reported earnings a couple weeks ago at the start of March. So now it seems like these publications and FinTwit and all the headlines and media outlets are only now starting to realize that, wow, Dell might be a great play for the pent-up AI demand. So I think it heads higher. I think it heads into the 150s. I closed out the rest of the April 19th, and I mean, I got higher strikes than the 150s in May, but I think even if it goes to 145, 150 in the next couple weeks, those 165s will be a couple bags, and then if it gets some severe FOMO, 10 bags or so. So that's kind of the thought process there on Dell. I'll continue to hold the strikes there. Tight Bollinger Band breakout from that 115 handle, maybe some consolidation in the 130s. Today it's over 130 right now. Next week, and then it can really start to head higher. So that's kind of the thought process there on Dell. That's why I continue to look for opportunities to play that one for upside. I'm not sure if I'm going to add any more. But what a great play this week, and hopefully that continues to play out. Intuitive Surgical. So, Intuitive Surgical is one of my favorite names back in the day. I mean, the company, if you take a look at the stock, it's at 392, but it's had a split. So, I mean, it's just a monster, one of those monster fundamental stories, tons of cash on hand, no debt, doing stock buybacks, high growth area. I always, when I talk about Intuitive Surgical, it always brings me back some nice memories. Back in the day when robotic surgery was still in its somewhat infancy, Intuitive Surgical was a name that it was Herb Greenberg came on. He said, "Oh, the company, it's garbage." They used to do robotic surgeries, and there was headlines that someone was running on the beach and their colon or kidney or something fell out of their body while they were running after having just had a surgery from Intuitive Surgical. There was a lot of these headlines, and the stock sold off on that news. But you have to look at the big picture, and you look at it now. I mean, it's such a great growth story, and there's competition. And I think it's Johnson & Johnson or it's Abbott. One of these companies has a competitive robotic surgery device that's coming out, but it keeps getting delayed, and that's some of the overhang that's been over Intuitive Surgical for a while. And NOx is going here. Let's just see about that. Sorry, NOx is spiking. So it's, I think there's plenty of room for more upside on Intuitive Surgical. But then this morning was finalized. Wall Street Journal had published a report the previous week that they were in talks to acquire SWAV, which is in the medtech space. That finally got released this morning. $13 billion acquisition. Not too much premium. The stock had been up a lot already based on the rumor and the report, but I think it just adds more premium to the medtech sector as a whole. You take a look at EW, Intuitive Surgical. I'm surprised Intuitive Surgical, which was ended last week at 400, is not higher. It also had an upgrade from Citigroup on Wednesday. They took their price target up to 460, I think, from 430. I think it's a strong play into next week. I think it heads over 400, possibly 410 or so, especially if the market cooperates. So really like that one for upside. I was hoping to be able to get some of the calls out for 100%. It came close when it was up to 390, almost hit 394. Maybe I'll get a second chance here. If it gets up to $2, I'll lock some of the strikes in just to cover costs, take off, again, that emotion, and then hold the rest for that possible move up to 410 or so next week. The other thing, and I was looking at weekly strikes, and in hindsight, what was it, 380? I forget where it was trading, 386 or so. In hindsight, I was looking at the 390s. I didn't pull the trigger, but in the back of my head, I thought it better to go further out next week. But the other problem is we have CPI data on Wednesday. So if the CPI data comes in hotter than expectations, I think the market, it's susceptible. We've already seen what happened with just a couple Fed speakers yesterday, what happened to the market. I think people are a little on edge that if there's no rate cut, the possibility or specter of no rate cuts is lingering there. And if that comes to fruition, I think the market's susceptible. So I hope that's not the case. The probability for a rate cut at the May meeting is pretty much zero, but the June meeting still is in the 50% range. So that's what the market's pricing in. So it really hasn't scaled back too much based on the comments from those Fed people yesterday. So that's Intuitive Surgical. Real like that one for upside in the coming days, because my calls expire a week from today. So that's Intuitive Surgical. So Broadcom, when the market was selling off yesterday, I keep talking about the greed reset, but it's been tough trading some of these chip names and semi names, because it seems every time it looks like just a little bit of pressure, the dip buyers are there. It's like someone's just there hitting a button anytime there's any dip in some of these names, and they just buy the dip. So Broadcom's been a tough one as a hedge, but it was reversing course with the market. It looked like a good opportunity for at least another hedge with the market selling off. Went from 1340 quickly all the way down under 1320, locked some of those in for a few 100%, and then I held the rest into today, which again takes out some of the emotion of trying to liquidate all my call positions, because I think the market's going to crash. And you would have thought, based on a lot of the headlines from yesterday in the afternoon, you were like, wow, we're going to follow through today, which couldn't be further from the truth. So, unfortunately, the rest are going to expire, but I'll continue to look for opportunities like that, small ones, because small ones can turn into big hedge positions if the market really finds some pressure, which I hope it doesn't, but that's what the hedge is there for, right? So that's AVGO. Same with MDB. So MDB, the chart looked extremely susceptible. At least I thought it moved to 320, and that was the November lows. If it got through 320, then maybe even further. But it it is off from $500 just in the middle of February. But I don't think that means much, just because it was at $500 in the middle of February, and coupled with snow, and snow has been selling off even after that CEO insider buy last week. It seems like that whole cloud space, I don't know if it's a trade-off where people are taking money out of the cloud names and putting them in the chip names and AI names. I don't know, but that's kind of what it looked like to me. But then you had that HubSpot report yesterday that Google looks to be acquiring them. That kind of lifted some of the names. And then today, I guess someone came out positive on MDB, Microsoft, and now all those names going bonkers. So not sure if I'll look at MDB at the start of the week, but still, if it can't break through, let's say 373, somewhere in there, it still looks susceptible for a move under 320. So I'll continue to look for that one for possible as a hedge play, as well as AVGO. So those are the two names there. What else to say about the pot space? Volatile once again today. ACB, 31% off the lows in a matter of 30 minutes yesterday. Here it is again today. You take a look, it's at 650 now, but it was at 760 to start today, right? So more than a 20% move. So it went from 760 down to $6 at about 1220, and then it started to bounce. It's gonna be rocky. I put it on the watch list. I've already locked a lot of profits in. Yesterday I got some of the ACB 7s out for over 1100%. Still holding some of those, and then the CGC, some April 10s and the May 15s. It's gonna be bumpy. So having locked the profits in, it takes out the emotion, the temptation to veer from the course, which I think, if I look at CGC, I think it's heading 17, 18. I think ACB is going to be over $10 in the coming week or two. So I'll continue to hold those for that upside. That's kind of the thought process there. IIPR, which is disappointing yesterday's sell-off, because it looked like it was ready to break out. It was up a couple percent, and then the market sold off, and it kind of moved in sympathy with it. But it's recouping some of the gains here, almost right near highs. Really love that name. At some point, maybe I'll get some May strikes. So those are the pot names. What else to say about the GLP-1 names? I put it on the watch. The first time I really talked too much about it. Very disappointing. Altimmune, GPCR, which finally is starting to do something today. VKTX is finally starting to do something today. And then turn was just horrible all the way into, I think it hit $5, $5.28 this morning. I hate to catch a falling knife, so I'm not going to try and continue to add pain on these turn calls, but at some point I'll revisit it and add some more strikes. I have to think there's going to be some M&A this weekend, next weekend. It's coming. So that's the GLP-1 names. Not much. I mean, NNOX, I did my little rant yesterday, so I'm not going to talk too much about that. Riley's still sitting up here in the green, up nearly 2%. Once that 25 breaks, I think there's going to be a massive short squeeze. Maybe I'm wrong, but I put it, I think I called it. It's the Hero Zero trade. So it's either going to be a huge monster squeeze or my calls will be bidless. Small risk on that, so I like the risk reward. I'm trying to think of some of the other names CDLX finally showing some life here this afternoon, but it was showing life yesterday and then it just reversed. Hopefully, maybe next week is the week it gets maybe an analyst upgrade, a kick in the butt, some more Clifford Sozen insider buys. That would bode well. Trying to think of some of the other names I've been watching. I mean, take a look at Amazon today. Impressive strength. I still have my DJT, just a couple of those calls left. That's been sitting there, but at some point maybe that catches FOMO. So I'll just continue to hold the last couple of my freebie plus profit strikes to April's. Gosh, and what else? I don't like to cry over spilled milk, right? But that Spotify trade, I thought it was going over 290. Got those calls on Tuesday. Wednesday announced the price increase as the stock goes bonkers. And then the end of the day, I didn't want to lose the profits on the rest of the call, so I locked them all in. Had some continuation yesterday, but then the market's selling off. I'm like, oh, good. I closed out the rest of those just in case. And then what happens this morning? Finally, the analysts, UBS, and someone else, Pivotal Research, came out and upgraded the stock. It's going bonkers again, up another 5% today. And then you go look at those. I was looking before at the calls. They hit 23.80 from 35 cents. So you do the math. Let's say you bought 10 contracts at 35 cents. That's $350 into $23,800 in 2.5 days. Not too bad. Not too bad of work, right? But can't fault it. I sold mine for over 10 bags and a little less than 10 bags. 1,500 and 1,100%, something like that. So it's tough to fault selling for that much because it's almost stupidity to hold for the bigger games. But that's the hard part of the option trading, right? I say this a lot of times. It's the easy part. Anybody can just buy positions, right? That's the easy part. Anybody, you can buy the calls. The hard part's to hold. And it's even harder when you hold and it goes bidless, right? That's the difficult point. That's painful. So those memories are always there when you're trying to hold a position. And how many times you hold a position like Spotify where you're up quite a bit, and then the next day there's a downgrade or the market's tanking or whatever, and your profits are gone, and it's a miserable day, right? So those emotions stick. So again, that's why I like to have the hedge positions. It's not something I used to do 10 or 12 or 15 years ago, right? I used to just fly by the seat of my pants, but that's an easy way to have a position completely go against you. All right, so that's my rant. Big week next week. Earnings, CPI Wednesday morning. Then we have earnings kicking off with the banks, JP Morgan, I think Wells Fargo City. And then earnings season, my favorite time. So then we get back to that and hopefully get some M&A next week, what's in the bio names. Over the weekend, maybe there's a report in Wall Street Journal. That'd be phenomenal. And push some of these GLP-1 names back into the black. So everybody have a great weekend. Thanks for listening. Rock and roll.